CNBC has launched a financial education initiative called Invest in You, Ready, Set, Grow as part of our partnership with Acorns. That's the saving and investing app. Former New York Yankee World Series champion Mark Teixeira joins us now. And we're very honored that Mark will be part of our CNBC Financial Wellness Advisory Council. It's good to see you. Welcome.
Good to be here, Scott.
Part of a good group, too. Tony Robbins, Sheila Bair, some other big names. And financial literacy has been a huge part of your life.
Yeah, it's been important. You know, we hear all these stories about athletes going broke, and there's some simple reasons for that. And one of the great things that CNBC has allowed me to do is be on shows like this and talk to different athletes about and really everyday Americans about saving and making the right decisions.
Between 1 and 10, what number would you say is the level of financial literacy in professional sports among the athletes?
It's probably a 3 or 4, unfortunately.
That low?
Yeah, because it's the thing. You have to be so focused to play your sport. I mean, it's a 12-month-a-year job. No matter what sport you play, you have to have that focus, that intensity to do your job on the field. You tend to not think about things off the field. You tend to not think about, well, what happens when I'm 40, 50, or 80? Because you have to live in the moment. And it's the great thing about professional sports, living in the moment. But as athletes, we plan to not think ahead enough.
Were you financially literate when you were playing, or was this a post-career thing that you said, I need to get more literate?
I had some great mentors around me, my dad being one of them. The first thing that my dad did was, hey, let me show you what a spreadsheet looks like. Let me show you what a P&L looks like. Let me show you where your check is going. We had financial advisors in Baltimore when I first signed my professional contract, and I started from day one. Problem is, most of these guys don't start from day one, and 10 years down the road, they've realized they haven't saved enough, and now they're retired and they're in trouble.
I love one of your mottos that you try and tell people is think of this as your last contract, which most people, I would assume, they sign this massive deal and they don't think it's the last deal they're going to sign, and they go out and shop here, there, and everywhere else.
Absolutely. You always think there's more money to come in. And listen, you can pick stocks for the rest of your life. I mean, probably to the day you die, you could be a really good stock picker. I can't be a baseball player for my entire life. And so I knew that. A lot of guys don't realize that, hey, this contract that's on your desk right now, when you sign it, that could be the last contract you sign. So $10 million bucks, you better put away 90% of that so you can live off it the rest of your life.
I was going to ask you, it seems as though the problem of predatory advisors or people that are out to get a wealthy, unsophisticated investor, it seems that has faded a little bit, and more of the onus is now being put on, hey, this guy just makes bad decisions, or this guy's family is taking advantage. So would you say that that's now the front and center thing is, let's get people educated so they can make better decisions on their own and not have to rely on shady financial
I completely agree. And this is the thing, a financial advisor, if I hire somebody that could be, Bank of America's top financial advisor and wealth manager, and I say, I want to buy a $5 million boat, and he goes, Mark, what are you doing? You don't need that boat.
Still your money.
You're fired.
Right.
So these financial advisors are saying, well, I don't really want to make my client unhappy, and if he wants to go buy that boat, he's going to go buy that boat. That's the problem. It's the individuals are making bad decisions. Right. The advisors, listen, they're advising. They don't have, the pen and the checkbook to write these checks. The players are the ones that are making bad decisions.
What's the first investment you made? What's the best investment you've made?
The best investment personally I've made is I bought a piece of property in Atlanta, Georgia that's now being developed as Quarry Yards, a big mixed-use development in Atlanta. I bought it between 2008 and 2010. You guys all know what was happening in the real estate market at that time. And I think it just taught me about buying low. So any asset, there's par, and we all feel, okay, that's what it costs. Then there's buying it low and buying it at the right time, and there's paying way too much for it. It's the same asset. And I think what I learned early is there's a bucket for my nest egg that I put away and I never have to worry about it again. Then there's the bucket for opportunities. And when a piece of property comes out there, or there's a company that your friend, he's smart and he's figuring something out, yeah, I'll make a bet on that. But I'm not going to put my nest egg in it.
You guys sitting around, you, Jeter, A-Rod, you talk about investing?
We did. And not enough guys talked, because at a certain level, it becomes noise. And that's why I tell every guy, be boring in your investments. 70-30 stocks, bonds, maybe 60-40, depending on where you are in your life. And get blue chip stocks and index funds, and then just leave them alone. Because if you try to start picking stocks, you guys are professionals, and it's tough. Imagine if I'm a baseball player trying to pick individual stocks. It just doesn't work.
I told you we were going to solicit some questions from our viewers, which we do every day for these folks. And Scott in Pennsylvania wants to know, who of you three, who's the better investor? You, Jeter, or A-Rod?
I don't know. I don't know about, but the most in tune and the one that cares the most is Alex. A-Rod, from the very first time he started talking to me about business, I'm like, this guy gets it. Now, it helps when you have a $250 million contract at age 26, right? I mean, someone gives you that much money, you better start paying attention to what's going on. And so I think Alex, this conversation we're having is, he's one of the guys that early on figured it out. And he's had a lot of opportunities. He's got a lot of money to work with. And so he's become more in tune with investing.
He's trying to, I mean, I know he's, gotten advice from Buffett and things like that. Jeter's bought the Marlins. You want to do something like that?
I don't want to buy a baseball team. I have 3 kids that I love to death, and I don't want a full-time job. I love what I'm doing at ESPN. I love my real estate project in Atlanta, but I also love spending time with my kids and going on vacation. That's not bad either, because I am retired. I'm only retired 3 years now.
Good deal.
Nice.
You have that baseball. Will you sign it? I'm going to send it to the gentleman whose question we just took.
No doubt.
So thanks for sending in the question. Tex, thank you. We appreciate you being a part of this. He's going to participate as well in some of our summer programming for financial literacy. It's coming up in April. And one last thing we should tell you is that NBC Universal and Comcast Ventures are investors in Acorns.